us here at the table right now is portfolio manager Darren Lekkerkerker and equity research analyst Ben Holton. Warm welcome to you both in this extended webcast we're having. Thanks for being here.
Thank you, Pamela. I'm excited to be here and talk about AI today. I think it's the most important thing in the stock market right now.
It really is. And Ben, actually, you guys worked together for a very long time. You've now run your fund for 10 years. Happy birthday, by the way.
Thank you very much.
But you guys have known each other maybe even longer than that, have you?
Yeah.
How does that work?
I don't even know how long I've known Ben, but actually we knew each other before Ben came to Fidelity. Ben was actually a sell-side analyst at one of the investment banks in Canada, and we had a really good conversation about some of the stocks I own. And so we identified him as a really bright analyst, and we wanted to hire him here at Fidelity. Then Ben sat across from me. He covered software, so it was great. We had a great daily conversation.
Yeah, it seems like it's flown by, but it's 14 years now.
Okay, wow.
So you guys work together how? Maybe we just sort of talk about this, because Ben, software is the area that you research the most. We're actually going to talk about how software in some ways has taken the biggest hit because of AI. So when you guys, sit down, there is a coffee. I don't know if you still sit 2 seats away, but how do you work together, Ben?
Yeah, I think I cover US software. It's a huge part of Darren's benchmark. So it's feeding him what's happening in the market, what stock ideas there are, and working with him to work on derivative plays as well. Of it's not just tech. Are there other areas that tech is influencing that as a diversified portfolio manager he can jump to?
I mean, you're looking across North America. This is the US software industry that you're covering. But as you say, that software, or now AI, is used in absolutely everything. Natural resources is also a huge area that you've come up through and managed for a long, long time. I wonder, put together a little bit about what you do versus what Mark actually manages, which is different, but in some ways complementary.
Right. So first off, I've known Mark for a long time. Like we started.
You guys also got together.
We started as an analyst together, working in Boston, and we were both, along with our kind of core team there, like away from home, and so we got to know each other really well. I actually had dinner with Mark last night. I think he's a great guy, and obviously has great performance. But yeah, I am different as an investor, as a portfolio manager. I think Mark is a growth manager, maybe the best growth manager, by the way. But he's a growth manager. He's focused more on investing in the leading edge, higher growth companies, privates, right? We had Annie.
Exactly. So do you invest in privates?
Analyst. No, I don't invest in privates. I don't like to be gated. I don't like to own a liquid things. And I also just kind of find that those companies are too early stage for me to invest in. I'd rather invest in more mature companies where I can think that, have better analyze the company and think that the moat around the company is more durable.
So diversified portfolio manager, you mentioned that, Ben, we're talking sort of about this style of making sure you're exposed to AI, but also there's a diversification. We'll talk about markets in a second. How do you think that in your top 10, Darren, for instance, I mean, there are the big names, they're the household names in many cases. They are the NVIDIAs, the Microsofts. So you're heavily invested and making sure that you're catching that. But the diversification, I wonder if you can just kind of speak to that, Ben, because you see it across other fields as well. It's what's going into every other industry.
Yeah, like obviously I spend a lot of time on the big software names.
Sure.
But it's not just the Mag 7. We go picks and shovels below that. We've got hardware analysts across the world that feed Darren ideas. And then other analysts in other sectors. Darren's done a great job extrapolating what we're seeing in the tech world to what we're seeing, in other areas.
Yeah, well, I mean, let's go into sort of the build out of data centers, because that captures a lot. I'll first ask you about the markets, because the build out of data centers is exactly what we think everyone's spending and maybe is overspending. This is the question, isn't it? Is there an overspend on data centers? Are we going to have too many? Is there going to be ultimately a glut from the demand that we see right now? You're invested in that. What do you think on that market narrative?
Yeah, so yes, you're right. There's huge spend on AI. There's huge spend across the whole value chain, from semiconductors to data centers to data center construction and the services that go into it, like power and stuff, the downstream industries. And maybe we do like overspend or get a glut, but I don't think we're anywhere close to it yet. And I think there's a lot more to go. I'm going to ask Ben if he wants to comment on that as well.
Listen, Darren and I were talking to one of the large hyperscalers yesterday, and they wanted to drive home that they're not, a field of dreams situation where they're building it for hope. They were stressing they're building what they're building for contracted revenue.
This demand is right there. It's real. It's on a contract.
Yes, the demand is all contracted. And not only that, they are trying to build as fast as they can, and they can't keep up. The demand is accelerating faster than they can build. And that is a problem in this market. Apps can go viral in a day, in a weekend. It takes a lot longer to scale the physical infrastructure
I'm
needed to
having trouble
support
downloading Sora still.
Yes, I've got a code. I can get
Can
that
you
to
help with that? It's really frustrating because you keep thinking, well, maybe they figured it out this week. No, not yet.
I can get you an invite for
Okay, thank you for the demand. But that's sort of what you're investing into. Take it into the build out itself. So data centers need the power, they need the whole infrastructure story. Take us sort of through how you're looking at that and invested in it.
Yeah, sure. And just another comment on the prior topic. So last week, all the hyperscalers reported, right?
Yes.
And so one theme that was constant during all those reports was that CapEx is going up, and it's being driven by AI spend, mostly on semiconductors, but also on networking and also people, other aspects. And so that's definitely a theme. Like we saw Mark Zuckerberg saying he's more willing to overinvest rather than take the higher risk would be to underinvest. And then we had companies talk about how there's too much demand, they're investing for the demand. We saw all three cloud providers, Microsoft, Amazon, and Google Cloud, announced accelerating revenue growth in their cloud. So we are seeing more demand. And now your question was, how do I invest across the chain? So you have to think about, who's been the primary winner to this point? It's been NVIDIA, right? Like they have the tools for AI. They've got the chips. They've got the software. They've got the ecosystem, and so they have like the best product in the world, the most pricing power. It's really an amazing company. And I know the stock's gone like this, but the earnings have gone even more like this. The PE has derated. Earnings have like more than 10 bagged, I think, over the past like three, 4 years. And the company is pretty amazing. Like actually half the revenue is in free cash flow right now. So been a great company. I do own the hyperscalers, and they're going in different directions, right? Networking companies, right? Networking companies are increasing their spend of the data center. They're being used to increase the utilization of the GPUs, and we're seeing increasing spend, more services, higher margins there, and that's been a very attractive place to invest. Some of the other areas are, how are we going to power and build all these data centers? So
plug it in
order to build, so like you look at other areas like industrials, utilities for the power. Industrials, you'll see, like, think about companies that make giant yellow construction equipment to build these things. They're also benefiting from a resource boom and adding services, right? And so I think we're seeing different opportunities. Think about, what about we've seen a whole nuclear renaissance that's going to take years to build and power these things. But what about the price of uranium? What about nuclear services? Atkins Realis has a nuclear service business that's in my top 10. It's been a very good stock this year.
We've seen nuclear deals all over the place. I mean, again, they'll take time to get up and running, literally, but they're all over the place. On the ecosystem piece of things, Ben, I wonder if you can take us inside the enterprise a little bit, the deployment, some of the fears, and how systems are being built internally, sort of on an enterprise side of things. You think of Fidelity, think of any big company that has data. I want to be very careful about how you're using that ultimately. And so maybe a bit slower on that, or just comment on how that's happening.
Yeah, so you're right on both pieces, meaning the data privacy and data security is paramount, especially for regulated industries like ours. Nothing trumps that. Okay, once we have that solved, then it's, what do you build? We are seeing enterprises move faster on AI than they have in prior generations, prior tech shifts. Now, that doesn't mean it's lightning fast. There's still lots of roadblocks, but we internally have a bunch of tools that Darren and I can use, and that more broadly the organization can use. We had our head of emerging tech in giving us a presentation. We try and learn from what we're doing internally, what we're building, what we were building, and then a solution came out, so we switched to buying it. And there's a million little use cases all across the organization. I think that's one of the confusing questions right now, is where's all this demand coming from? Because
nobody seems to really answer that, I noticed.
Exactly, because outside of OpenAI and Anthropic, which are the two biggest users out there, it's, okay, what's next? And a lot of that is these kind of dispersed use cases that might themselves be using OpenAI in some form. But it's like you have a shared mailbox, shared email inbox. Can you use an AI agent to sort where those emails should go?
Right.
You know,
Mark Schmel was using that example as just sort of speeding everything up and making everything, more efficient, basically.
Right. That example is a person had to go through that mailbox and sort, this email goes to Darren, this email goes to Ben, this email goes to compliance. That's not high value.
Time well spent.
Yeah, time spent, nor is it fast. AI can do that instantly, so it ends up being better customer service because those answers get answered faster, right? They get to the right person faster. And so you think about that. We've got multiple use cases like that internally. You then scale that out to multiple companies, and all of those little bits start adding up to chewing GPU time.
And they're kind of unseen in a way. I mean, I guess they are measurable ultimately, but I wonder if you can just speak to that, because there's sort of the quiet things that are going on that you don't quite measure. We're always looking to see when kind of the SG&A side of it, like, yep, it's accretive to earnings. I asked you and Darren about whether that is there. Like, do you see that at this point?
I think right now there's a big debate about what is the ROI on AI spend. And I think right now you're not seeing it in terms of incremental traditional ROI metrics, but you are seeing it in terms of accelerating revenue growth. Well, you are seeing it actually at some companies like the semiconductor and the networking companies, but I guess maybe my answer was focused on the hyperscalers that are doing the bulk of the spending. Actually, you are seeing it a lot in the downstream businesses like industrial, like machinery businesses, construction, just because they're getting like massive amounts of revenue, higher margins. So depends on, I guess, where you look in the stack.
Yeah.
Any comments? Yeah.
I think on the efficiency side, it's very use case specific. So one of the biggest use cases out there right now is software development and basically a coding assistant. Now, you take an average software developer, pretty highly paid. These tools can cost $60 to $100 a month. Some even freemium, so even less. That is a fraction of the value created if you're saving these people 30% of their time or increasing their output by 30%. Right? These are just no-brainer applications, and that's where you're seeing real value be created.
So Darren, again, coming back to your style of investing, which would be quality, slightly more conservative than what Mark was talking about. They're hunting for the next killer app. I mean, who isn't on some level, but they're actively looking at the private markets for that. Again, how does everything that we're talking about set up for a slightly more conservative approach? You're going where everything is moving in the markets, but how are you protected, I guess, more so than being purely growth?
Yeah, so you're right. I'm more conservative than Mark. I'm focused on a high quality investment style. So I'm really looking for businesses where I can see good fundamentals, a great business, but also like more of an economic moat around it. And so I would say that probably I would own like probably larger companies, I would think, than him. I don't do the privates. And so
what about the natural resources? We talked a little bit about this, sort of the nuclear side of things. That's an area of interest for you, sort of as a mode of power. Outside power, I mean, what about copper? I keep saying copper actually isn't going to be that used in the data centers as it is in, say, housing. But go to sort of the mining, minerals, the other types of natural resources that get included in this story.
Well, resources is seeing a boom this year, that's for sure. Probably gold is up. It doesn't have that much to do with AI. It has more to do with the diversification of the US dollar trade and the thoughts around debasement of fiat currencies globally. But that's seeing a boom right now. And the miners are actually reporting, some of them reported this morning, and they're like straight up. They're actually getting good results because diesel's down. And so they're actually seeing higher margins, and they're being fiscally prudent. They're actually buying back their shares. So we're seeing those go up. Copper, I think about 1% of demand we could see from AI data center use. But so it's not a ton, but
something.
It's something, because typically you have like a surplus deficit that's around like 1-2%. And so if you take that away, it really matters. It's really being driven more by a lot of mishaps at large mines around the world, which is constraining supply.
Okay. All right. So it's not necessarily the AI story yet at this point.
That's right.
Hello, investors. We'll be back to the show in just a moment. I wanted to share that here at Fidelity, we value your opinion. Please take a few minutes to help us shape the future of FidelityConnects podcasts. Complete our listener survey by visiting fidelity.ca/survey, and you could win one of our branded tumblers. Periodic draws ending by March 30th, 2026. And don't forget to listen to Fidelity Connects, The Upside, and French Dialogue Fidelity podcasts, available on Apple, Spotify, YouTube, or wherever else you get your podcasts. Now back to today's show.
Anything else in natural resources that you want advisors to know, investors to know, that is of interest that either ties to this or doesn't tie to this? Because you're looking at other things as well.
Yeah, I'd say I run the mining materials side of the fund, and so on that side, I'm primarily on gold and copper miners as well as aggregates, companies that own quarries. These are just actually, I think of them as like sort of cyclical compounders within the materials. And my co-PM, Joe, one of the things he owns that's related to AI is uranium and nuclear services companies. But he's also done a great job investing in, I think, like oil refining is very tight, and as well as oil services.
Okay, really interesting. Take us back a little bit to how we're going to, in our lives, use it. It seems to change week to week, maybe not week to week, but over the course of sort of a year. Google's a good example of how we all get adjusted to using AI differently. At one point for a company, they needed to bring a whole bunch of consultants in and spend some time on how the company worked, and then perhaps implement software that you would cover and look into.
Yeah.
How different is that now?
No, I think a few different avenues there. On the how are we going to use it? If you're not using it personally, you're already behind. You should be using OpenAI, ChatGPT. You should be using Gemini. Like, play with these things, because this is where the world's going. Then try and translate to that. Wow, this is really good in my personal life. How can I push for this in my corporate life? Obviously, there's more roadblocks there that need to be cleared, but it is something that people should be doing. Because
can you trust it with, getting your banking out of the way, doing your spread? Can you trust it?
I think you need to be smart about it. There's certain use cases, yes. There's certain use cases like, no.
Okay.
Right?
Can you be more specific? Don't use that one.
So ChatGPT has, in my personal life, largely supplanted Google searches.
Yeah. Okay.
Right. And so that's giving me answers.
But as the assistant.
Yes. Well, it's instead of going down a rabbit hole through Google, right? Your 10 blue links and then having to find that and read each one, you can now get an answer and then ask follow-up questions without it being a new Google search, right? You're not starting from zero every time. There is context about this. I spent a bunch of time this weekend trying to get Halloween tattoos off. It was a very good,
Is it vinegar? What's the thing?
Baby oil.
Oh, baby oil.
Yeah. And it remembered my kids' names and said, if this is for your kids, use baby oil, not this medical adhesive remover. Okay. That is a useful thing. But it's that kind of thing that you need to be exposed to and just start using it. In the corporate world, I think there's different approaches. When there isn't something that exists, you are seeing companies try and build their own, right? We're so early. We're so early in this that the solution for your specific problem might not exist yet. So you have to will it into existence with a bunch of building blocks. Now, we internally have done that. And then, something catches up and we're like, okay, it makes more sense to buy that than spend our time developing something where there's a better packaged solution that costs much less than our own support. This, though, is also becoming tools to deploy software. Meaning you used to have to bring an army of consultants in when you wanted to launch a new enterprise application.
And you would price it per user in the company, for instance. What do they call that?
Yeah,
bums and seats.
Yeah, there's per seat pricing for the software, but there would also just be per hour pricing for these consultants. Right. And now what you're seeing is a lot of these tools be automated so that you don't necessarily need as many IT service professionals spending months to do something that technology can do in days. So that's really interesting. That makes this whole flywheel move faster. Often, and this is tragic, but you see a lot of time in enterprise software, the deployment cost costs more than the software does.
So there's
which
a
is
winner
insane.
and loser in there. I mean, clearly.
Yes. Yeah, and some of that debate is not settled, right? We're seeing that within software names. The market is bifurcated into AI winners and AI losers, or I think more aptly, perceived AI winners and AI losers. But to Darren's Google example, that sentiment can shift quickly.
Well, and also last year, I mean, we were talking about those big companies in the world that have incredible data to share through AI. And can they charge for it? How do you monetize that in a new world? And I think at that point you were thinking there are areas where you're kind of holding onto the bicycle railings and thinking, which way will this go? Or will the data just be free and then actually what they do isn't as easy to monetize? Like, things have changed, haven't they?
Yeah, that's right. And I think there was one company that I owned that I no longer own that had a lot of proprietary data within one very specific vertical market, and I still think they are an AI winner, but I also think that there's probably going to be a little bit more competition for them. And since they had done really well, once you realize your investment thesis, it's time to move on. It's
time to move on, and that's how you make some of your decisions on that. Go to the consumer for us. So much in the way that we converse and the consumer finds its way in the world, they don't need to go to websites anymore. They can just do a search and probably buy it within whatever version of AI search they're using. It's generated for them. They just make the point of service there, a point of, you can pay for it there. How is the consumer coming to this? Are there investment opportunities there for you, Darren?
Yeah, sure. So one thing that's really interesting with the consumer and how they interact with companies is agentic commerce.
Yes.
And so Shopify reported yesterday, and this was a theme discussed on their earnings call, as they actually have a relationship with ChatGPT. And so it's kind of interesting to see how this will play out. Like, one example would be, instead of putting in like a Google search, like, where do I get the best belt, or who makes the best belt?
And they
you
give
ask
you
your AI agent. So it's kind of like similar to like asking a friend who's like an expert on belts, and they say, actually, it's this random company in Italy you never heard of. And then maybe you use Shopify or another way to buy it. And so we'll see how that trends. I would say more generally, aside from AI, on a macro side, I feel like the consumer has been really mixed, and it's an area that I do have some concerns on. There's been some talk of like a K-shaped economy where the sort of wealthier people in the economy are feeling the wealth effect of a higher priced house and a higher priced like stock portfolio, and are spending really well. Did you know that 10% of the U.S. consumers, the top 10% of income, spends 50% of the purchases? Is quite skewed, actually, and maybe the bottom 50% are not doing as well. And so, it's really interesting. And maybe that's why, we can, I don't want to stray to politics, but I mean, maybe that's why, like, other people are being elected. And so anyways, it's pretty interesting.
That is really interesting. And the intersection there is really interesting. Can it be ultimately for the rest of consumers who are struggling? Is there a deflationary effect with AI? This is kind of a high-level question, but ultimately, are things more available and therefore the competition brings the price down? I mean, is there a deflationary element? Ben, I put that to you, for the consumer.
So I think technology is generally always deflationary.
Right.
We're too early in it now to see a real impact. I think where you are seeing it is companies capturing it as margin rather than passing it on as lower pricing. Eventually that might get competed away. If you're the only one in the market benefiting, you can capture the value. If everyone is doing it, it starts to bring prices down.
So that's to come, something to watch.
I think so.
Okay. Let's go to the economy just a little bit. Come back to your point there. You're investing in the economy that we're in. We know that there are struggles for Canada. How much are you more towards the US? It's an extraordinary year for the Canadian stock market, but just tell us about the balance of how you're invested right now.
So I think for the North American fund, it's pretty close to the longer term target of 70% US, 30% Canada. Yeah, you're right. Canada's done better than the US this year, both in terms of the currency as well as the S&P TSX outperforming the S&P 500. In terms of the 30% of Canada, I wouldn't think of that as 30% of a Canadian fund. I would think of that as the best of Canada. And like, I actually have the ability to go to 0% Canada if I want, but I typically own the best, like, I don't names that I can find in Canada. And so, yeah, that's how I think of the fund. Go ahead.
Well, I was just going to ask you broadly, what are those? What sectors are those? Are they sectors? I know you stock pick, but I'm just
sure.
curious.
So I would
Can you
say
give
it's technology.
Yeah.
So Shopify is in the top
It's top
10. I would say it's financial services in terms of alternate investment managers. I would say it's computer hardware networking stocks. I would say that it is mining and materials, and we've talked about gold, we've talked about copper. These are things that I'm bullish on. And retail. And so actually have a big winner in retail in the fund this year. And for me, like timing was paramount. And so think back to the tariffs. We haven't even brought it up yet on this call, more AI focused. But when the tariffs came out in April, it absolutely decimated stocks in the retail sector. I actually was at a presentation intended for hedge fund investors saying the entire sector is a short. They're all like worthless with the tariffs. And I was like, okay, like I think this probably has to change.
You're overdoing that.
At some point, like people are going to want to buy things. Right. And so I ended up buying a Canadian retailer that was expanding in the US that is seeing a lot of what we call brand heat, with their brand really resonating with consumers, is launching a digital app and is growing its store base. And the timing was really great. It's been more than double for the fund.
But how do you go, fascinating. So we've kind of hit the retailer and the consumer there. How do you take a look with a fast-moving situation like this at the winners and losers? I mean, how does anything have an amazing moat around it when it's just getting off the ground? Or maybe that's not where you go at all.
Yeah, I think we need to be conscious that major tech shifts like this, like the mobile era before, the web era before that, they can destroy moats. So the moat that you thought you had could disappear, right? Like these end up being bridges over that moat.
Sure.
And so it's really trying to assess what the moat is, and does that change or does it survive, right? If it's workflow related things, does AI disrupt the workflow or is it additive to it? And I think this is the debate the market's having on a lot of these stocks right now.
So it's really interesting. I put that to you as well. I mean, because you're the one pulling the trigger to either buy or sell, taking a look at that. I mean, there are new ideas forming in this market. How do you have confidence when you're going in there?
Yeah, sure. And so while we're talking today about AI, Pamela, my fund is a diversified fund, and I have like a variety of idiosyncratic drivers of the different like companies that I would own in that fund. Like number one, they're all high quality companies. But so other than AI, so I've talked about retail, aerospace has been a really big theme, and we've talked about this for the past few years, and I've owned it since 2022. I think, like for me, I think if you're trying to find high quality companies, own monopolies. And so I think that for aerospace companies, large parts of their businesses can be a monopoly because the parts that they make have to be FAA approved, as well. The services as well are like only certain people can provide it. So they tend to be very sticky and high margin. There's a lot of secular growth there. And other than aerospace, life sciences. So think of these as the companies that provide the picks and shovels for biotech and pharma. I don't want to take large individual bets on certain drugs, and then if the trial fails, the stock goes down a ton. Instead, I'd rather own these picks and shovels companies. And the end markets are starting to improve. Pharma and biotech is starting to improve as an end market. You can see the biotech index ripping. Some of the other end markets like academic and government in China are starting to improve, and these stocks are cheap. So I have some exposure there. Streaming, in terms of video and music, Netflix is in my top 10. But I think that there's a lot of pricing power here. I think the whole industry has actually started to raise prices. The overspending on content has moderated, and there's a lot of growth in pricing. There's a lot of growth on the ad side. And then on the music side, there's a lot of growth in users.
Are we going to switch, Ben, do you think, to be from our phones to be using the glasses? I mean, nobody really knows. He seems to be discussed, but AI is changing a lot of different things. Are we going to consume what we think we consume now at a different level via something else, a different gadget?
Yeah, I think, Annie and Mark talked about this, of trying to see the future, right? Yep. And trying to see where things go. And that means, looking at different paths. And Uber wasn't a thing until we had the iPhone, right? And so you don't know what's going to come. We try and be on that leading edge. As much as Darren doesn't invest in private companies, he'll join meetings with them and learn from them, see what's coming, see if there is something that could disrupt one of your higher quality companies. I think the form factors are changing. They were silly, right? You look at some of these big goggle-like things, that seems like a real niche use case.
I'm really glad to hear you say that.
Yeah,
okay.
Right. Like, might be really awesome for your living room, but that's about it, and probably a pretty small market. As we move into more socially acceptable wearables, right? The Meta glasses, things like this, those start to move the dial of better fitting into everyday life. And I think that's what we need to see is technology that can change the world, but fits into the world we want to live in.
Okay, fascinating. So if you take a look, again, what Mark's doing, the way you invest, we're plowing through markets that are getting a bit volatile. It's hard to know, as you say, you think we carry on maybe with volatility and maybe we oversupply, but not yet. What does not yet mean? Does that mean, can you give us a little bit of a timeline, like not next month or not 2 years from now, something in between?
I think it's longer. I don't want to tie myself to a year because inevitably I'm going to be wrong.
Yeah.
But I think like, look, we definitely learned last week that these companies are definitely moving forward on AI spending. And then in terms
that money is going into the economy.
Yeah, and in terms of the data center companies, I think there's going to be a multi-year build out. Like I was on the phone yesterday with the CFO of a company that does construction of data centers, and like their rate limiting factor is they can't find enough people in the trades, and they're going to now to high school to recruit people. So I think there's some time here, but I also do think that there will be peaks and valleys and volatility on the way, and I think that's also the opportunity for investors.
And so how does your fund, perhaps even with Mark's complementary, sort of take investors through that? Because it's a bit of a journey there.
Yeah, I think it is complementary to Mark's fund. I think he's more growth focused and he's probably going to leverage the AI theme more. I think that my fund would be more conservative and it's probably going to have more diversity of themes across the fund. But I do think we're both looking for the best stocks that we think we're going to make money and drive returns for our unit holders.
Yeah, so you should own both, so essentially.
Yeah, I think so.
Why not? Yeah. Okay. Ben, take us through a little bit on, just kind of the what's coming next piece of the story, of what you're looking at that, again, could disrupt some of the companies that you take a look at, that you invest in. Is software, how is it transforming?
Yeah, so the market, again, has separated these into AI winners and AI losers. Basically, all of my days now are spent trying to sort the value traps from what could be generational buying opportunities, because the sentiment is wrong on those. Now, some will be right. Some software companies will go away. Others, like Google did, will pivot from AI loser to AI winner. What's coming next? I think we're starting to see these move from the models and technologies into applications that these companies can sell. And so we're starting to see that revenue, or in this case ARR, ramp up. Right. And it's tracking that, monitoring that, making sure we're turning these ideas and these promises into revenue and into earnings ultimately. Okay,
and that's what you're investing in. Just final thought to you, Darren, on what you want to say to investors here.
Well, thank you for listening, and thank for those that are invested in my funds. Like, I super appreciate it. I'm excited. I really like what I own in the fund today. Yeah, superstar. It's great to see you both here. Thank you very much, Ben and Darren, for joining us. Thank you.
Thanks for watching or listening to the FidelityConnects podcast. Now, if you haven't done so already, please subscribe to FidelityConnects on your podcast platform of choice. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on YouTube, LinkedIn, and Instagram. We'll end today's show with a short disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again. We'll see you next time.